Hey everyone, thanks for tuning in to 15-Minute Finance. Today we're going to be going over what has happened in the recent weeks with China and why all of these China stocks have started to drop. So what's happening and what we're seeing right now is actually part of a three-part event in my opinion, and this all started a few weeks ago when China actually disallowed Didi users from downloading their app directly after they IPO'd on the US stock market. Then, about a week ago, they stopped Tencent from being able to exclusively sign deals with global labels, and Tencent Music basically makes up about 90% of the Chinese music industry. Most recently, Tencent suspended the ability for new users to sign up for its WeChat app, which has about 1.24 billion active users. So this would be similar to if Facebook stopped allowing people to sign up for their platform over security reasons. The effect this week was pretty devastating. So we have Tencent down about 10 to 15%, Alibaba is down about 8 to 10%, Didi is down 25 to 30%. They're absolutely getting hammered. And then the China ProShares ETF, which just tracks the Chinese stock market as a whole, is down about 12 to 15%. Now, as of Wednesday trading day, shares started to rebound a bit, but this just shows the level of magnitude that these Chinese regulations have had on their market in general, especially for their tech giants. So in order to see and kind of think about what would happen next, we can look at a similar situation which happened back in December when China halted the Alibaba-backed IPO of Ant Group, and that actually caused a 15% drop in the stock price of Alibaba in just a few days. So it went from about $260 to $222 after China announced that it was halting that IPO. So Alibaba is now sitting at about $180. And to be fair, Alibaba was falling even before the announcement of the IPO suspension. But honestly, I think this example can provide us guidance in that we might be seeing some weakness in the near and midterm for Chinese tech stocks. So I don't think it's going to get any brighter in the next couple weeks, couple months here. I think that you're going to see Chinese tech stocks continue to slide, and if you do see gains, it's going to be moderate, but it's never going to be back to the levels that we saw previous to all of these regulations. That's going to take probably 6 to 12 months in order to happen. The biggest upside in this scenario is that the fundamentals of all of these companies has not changed, right? So if you believe in Tencent and Alibaba, which you should, they're massive tech companies in China which control the majority of the Chinese market, which is kind of why they got targeted. But if you believe in those companies, then really nothing has changed other than a few regulations from the Chinese government that just made them pump the brakes a little bit, and they couldn't just operate with just complete freedom in the market and basically acting as a monopoly. As I mentioned, this is likely just a short-term risk. I will preface this by saying I don't know what's going to happen. No one really knows what's going to happen with the Chinese government. They can really do whatever they want to do, and they don't have to go through a legislative body. They can literally just put out these regulations overnight and force these companies to do these things. It's a totally different operation over there. So in the short term, huge risk. I would definitely just stay back. I wouldn't even really treat this as a buying opportunity unless you have a very, very high risk tolerance, because worst case scenario, what we could see is these regulations continue and continue, and eventually these companies might get broken up. So that would be the absolute worst case scenario, and in that situation you would really see these stock prices plummet and you could lose a lot of your investment. What should you do? In my opinion, don't sell. Do not panic sell. Everything is perfectly okay right now, but definitely continue to watch the situation closely. If you invested in a good company with solid fundamentals, which I personally think Tencent and Alibaba are, then you're fine, because these fundamentals haven't changed at all just because of these regulations. So your investing time horizon should be 3 to 5 years if you're investing, in my opinion, intelligently and how a lot of professionals would tell you to invest. So this is just a blip on the radar, and like I said, just keep an eye on the situation. Just sit back and watch and see what happens. So that's my thoughts on the situation right now. Thanks for tuning into the video. Just a quick short one that I wanted to catch everybody up on what's going on and hopefully provide a little bit of guidance and a little bit of easing of your minds. So thank you for tuning in. If you liked the video, then please like and subscribe, and look out for more videos in the future.